Good morning, everyone, and welcome to the European crossover webinar. And we've seen the euro come right down into this 1309 level that we've had, and we've mentioned that before as an area that we may go on and try and reach out. I think we've had it on the 2 hour before, but we're seeing the dollar. Yeah, there we go. We're seeing the dollar continue to push a little bit higher. Not to be surprised, considering how weak that the euro finished the week out as. And we'll take a look where we stand here with cable. Still languishing a little bit lower here. We do have some data later on this morning. Actually, at the bottom of the hour, we do have UK GDP at the bottom of the hour coming up here. And that's pretty much it for the day that I can see here. We expect some German data also, but January inflation, I believe. But well, like I said, we've made it down here this 1309, and the dollar index itself just above this key area here, this 96.72. We'll reference that. But really, the door's open here for 97.09 here. We're going to get into the morning bid. We'll also take a look at where we stand here on gold. Gold has eased just a bit, but you know, one of the things that we looked at in the Asian analysis is it stayed so strong in light of where the dollar's. You know, here's the dollar still pushing higher. The highest level we've been here on the cash dollar index for some time. Look at that, and gold isn't even paring back very much at all. I mean, it's a testament to where things are, how gold has moved. It's, you know, we made up here this 1323. We're looking for a pullback to 1304. We got the pullback to 1304, but it's maintained its resiliency. I mean, if where the dollar is, the minimum we should be probably is 1292 if you think about where the dollar is, and gold is just continues to hold up very, very well. So we're going to quickly move into the morning bid. News is very, very light. And like I said, we already started only cover news when it's, you know, particular importance. But like I said, it's a very light start on the news anyway. So we'll get to that. Let's go and click this off. So at the morning bid, Washington rediscovers Central Europe. In the 2000s, Washington was sending top diplomats to Central Europe on almost a monthly basis that avidly promoted the region's aspirations to mold itself into European Union and NATO structures after the collapse of communism. But a sense of job done took over after NATO's expansion eastward was completed and the U.S. turned its foreign policy attention to Asia. U.S. Secretary of State Pompeo's trip to Hungary, Slovakia, and Poland started today is an attempt to readdress what he acknowledges as a decade of neglect that has, among other things, allowed more Chinese and Russian influence into the region. Some concrete projects will be discussed. Britain's defense minister, meanwhile, sets out a call for the country to be a hard power player after Brexit, always ready to defend its interests with military force when needed. Williamson will outline plans to send its new aircraft carrier to the Pacific, invest in offensive cyber capabilities, and develop more military lethality than in recent years. Just a lot of politics. Eurozone finance ministers meet later today are set to choose Ireland's Philip Lane as a successor to Europe's central bank chief economist. Peter Pratt, whose term ends at the end of May, as the sole candidate, the 49-year-old Harvard-educated economist Lane is a shoo-in before his impressive list of academic honors, articles, essays, and teaching roles around the world are taken into account. He's set to become Ireland's first representative on the ECB's 6-member executive board, and his appointment is an integral part of the ECB's reshuffle, which includes the replacement of its president, Mario Draghi, in October. In markets, Chinese markets return from their lunar year break with hopes today resumption of Sino-U.S. trade talks in Beijing will bear some fruit. Many now assume the March 1st deadline will be extended, even if a major breakthrough is not forthcoming. Wishful thinking or not, Shanghai stocks return with gains of more than 1%, with Hong Kong up 0.5%. There was less optimism on the week's two other major deadlines, talks on averting another U.S. shutdown. Next week broke down over the weekend with White House and Democratic leaders in Congress locking horns over President Trump's insistence on funding for a border wall. Wall Street stocks were steady to lower for the first thing, with growing anxiety about futures earnings, downgrades amid the corporate earnings season. Expectations for aggregate annual S&P profits in the first quarter are now negative to the tune of 1%. But let's see here, the first contradiction since 2016 and reinforces some forecasts for a U.S. earnings recession, even though markets have stabilized through January on the assumption that the Federal Reserve has paused its interest rate rise campaign. But the Fed continues to reduce its balance sheet by $50 billion a month and is tightening liquidity in the market in the process. The dollar index hit a near 6-week high. The dollar yen popped back briefly above 110, with the euro dollar touching its lowest in more than 2 weeks. European stocks took hard to the positive return of Shanghai, and futures are pointing higher, but the threat of recession is very real in Europe and already in full swing in Italy and in Germany. Industry in the final quarter of the last year. Benchmark German bond yields held below 10 basis points after dropping last week. Many are now focused on the European central banks resuming some liquidity support for the economy via targeting cheap loans or TLTROs. European earnings are now on track for the worst quarter since 2014, although valuations are already much cheaper than their U.S. counterparts, and there's a positive skew on the incoming updates beating forecasts. Well, I guess they're still hoping for blue skies ahead, but it's been pretty bad storms, and that's the reality of where we've been so far. We'll quickly move into the Asian currencies. Just a general talk about the Asian level as far as U.S. officials and the kickoff of the campaign. U.S.-China talks over Valentine's Day will be closely watched again for signs of progress, but the reality is that olive branches rather than those rose talks are the best that anyone anchored in reality may be looking for. That half-empty view with U.S. trade talks, hawks such as Litzinger leading trade talks, is that a deal for Trump to sign off will probably elude, but the first half take on this statement alongside like of the Trump-Xi meetup is that the truce may be extended. And that's probably, I guess, the best that they can go on and hope for. Moving on to the dollar hovers near a 6-week high on fresh trade and global growth worries. The dollar stayed near a 6-week high against a basket of currencies. U.S.-China trade talks are now big focus on the week, and the dollar strength is indicative of the cautious market sentiment right now owing to its safe haven status. The Aussie dollar and the euro are at vulnerable levels right now, and the further dampening and risk sentiment can lead to a further downside in these currencies. U.S. negotiations this week will press China on longstanding demands to reform how it treats U.S. companies' intellectual properties in order to seal a trade deal that could prevent tariffs from rising on Chinese imports. The dollar gained 1/10% versus the yen at 109.82. However, trade expects moves in the dollar yen to be small on Monday as Japanese markets are closed for a public holiday. The Swiss franc, another currency perceived to be a safe haven, was marginally higher at 99.95. Trade tensions between the two world's largest economies have been a major driver of global investor sentiment. And lastly, we'll just finish up with gold. Gold slips as trade tensions buoy dollar. The gold prices eased on Monday as uncertainties around the U.S.-China trade tensions made the dollar buoyant, taking the sheen off the metal's safe haven appeal. A vigorous dollar is acting as an impediment to gold in the near term, said Benjamin Liu, analyst of Singapore. But over a long-term perspective, we are quite bullish. Global growth authorities, the absence of positive signs in the U.S. China trade negotiations and reduction in the Eurozone growth forecasts have laid a strong foundation for gold. Trump has vowed to increase U.S. tariffs to $200 billion worth of Chinese goods. The dollar strength comes despite the Federal Reserve pausing its multi-year rate hike cycle and dovish trade stance exhibited by the several Fed officials. Gold touched a 9-month high at $13.26 in late January. While gold is supported by the Fed policy, prices will likely remain buoyed, but range-bound until there's clarity on the trade front on U.S. government shutdown, analyst Edward Moya said. Talks on border security funding collapsed after Democratic and Republican lawmakers clashed over immigrant detention policy as they avert another government shutdown. So that's it. That's where we are. Takes us right here to the analysis. We'll go and get started on that. You can see this euro is kind of holding this 1309 area here, but still not a whole lot of movement. So we'll move on to the analysis. So we'll start off with the euro, and this is the innate analysis that we're laying out for the week. The euro's downside momentum continues towards 113. Not expecting a respite until stops are taken out with initial support at 1286. The daily close will set up a challenge of 1218. So daily close below that 1286. Initial resistance is 1360 with a daily close below daily close above 1393 required to quell the downside pull. So we're looking for this initial support coming in at 1286, and we're looking here on the daily here on the euro. Now, as I mentioned with the euro, we do have a support level here at 1309 that we just made it to here, right to the pip. You can see that here, a little bit of pop, but certainly it looks like the market's not going to be satisfied until we can get past 113 to test these stops. Now, there were some options last week and thought of central bank buying that was holding this market up. Why, I'm not really sure, but you can see here we've been on a steady progression low with barely even a respite. I mean, we've got a little bit of a bounce from 29, and that lasted for what, about 30 pips, and then we slided back down, came back to 29, rallied about maybe 20 pips, and here we are pushing lower. And you would expect that possibly we would have got a break as far as maybe an oversold bounce. But the problem is the economic news is so dreadful out of Europe, and mainly with powerhouse Germany. Those numbers continue is that we've seen this continued drive pushing lower. So it isn't even when you look for maybe a technical respite of an oversold bounce, and you get down here and like, okay, we're probably going to do for a move up here closer towards 1390. Then the same day you go and get woeful German news, and that pushes it down. And then it just seems like every time the euro wants to maybe think about getting itself off the mat, it gets knocked real hard with more poor European economic news, and we're seeing some of the poorest since 2014. So the whole eurozone is really just slid into, is basically on the precipice of a full-blown recession at this point, and there's just not anything to go in and prop the euro any higher. So as I mentioned before, early last week, I'm surprised we haven't seen that in a while. We're just, you come in one day and we're 85, 90 pips lower. So when we go and move on here to the daily here with the euro, it certainly looks like they'd want to go in and take out the 113. There's that 1286. And if they're going to go and take out 113, I don't think this market is going to be satisfied until we get past 113. It's 1286. Now, if we get a daily close, and going back to the analysis here, until stops are taken out with initial support at 1286, a daily close below 1286 will set up a challenge of 1218. And that's going to be, we get a daily close below 1286. I'll tell you what, we're just going to slide right down there quick as grease lightning here, because at that now, then you'd really open up to the door where who the heck would want to be, any type of a bull hanging on would pretty much just give up at that point if we got a daily close below 1286. And I wouldn't be surprised by the next morning we are already down there knocking on the door at 12. But for all the woeful news, it's tried to hang on, but each day getting knocked lower and lower. But certainly it looks like they'll want to challenge those stops at 113 and look to go on and get this pushed down and see if we can test and see what we've got below that. Now, getting back once again to the analysis here, with a daily close above 113.93 required to quell the downside pull. So nothing changes overall. Let me pull this back here. This market on any kind of rally is still going to be a sell. I mean, there's some resistance here at 1360. That's probably your initial area here to think of, but we would need to get above 13.93 just to quell the downside. This would not even turn it into any kind of a bullish thing. All it would do is just kind of slow this downside momentum. Would say, okay, we've gotten overdone. Now, can we push up a little bit higher? That's all it would be, is that if we're going to go and push higher how much further could we, go? And maybe we're a little bit overdone on the downside, and certainly we are. I mean, there's been no respite here on here. Look at this, just 1, 2, 3, 4, 5. I mean, just 1, 2, 3, 4, 5, 6. I mean, 5 consecutive daily closes lower, but I mean, certainly working on a 6 right now. Initial support, you can see, initial resistance, I should say, is going to come in right there at 1360. Still a ways off. I mean, we can certainly find even closer, but if we were to get a bounce, your real resistance comes in at 1360 just for starters. But you still have that here. Well, we came down here into 1308. There's a support here, and as I mentioned, we have that on the 2-hour chart. No, I put 1308, but it's got right here at 1309. And we've come off of this 1309, and we are finding some support. But as dreadful as the euro is, and we're so close to 113, we're looking for these stops to potentially go on and be hit here. We're looking at 1280. There's some support here, 1298, but we have to focus on what the bigger picture is. And that's right here at 1286 coming across. And that's where essentially the rubber meets the road there. If we take that dip down there, it's going to be important for us to go and hold that area here, 1286. So we're going to use this as our bias chart support. We have come down here to the 1308. This was actually our support from Friday. We thought there was a chance that they would move down there. Well, it's come to 4 here today, but the most important one is going to be this 1286. And that is a key closing level. Let's move on to the cable. Okay, cable on the 2-hour remains in sell mode despite a fine recovery off the Bank of England lows and the 38% retracement. A 2-hour close above 29.75 should turn the EMAs in a buy mode shortly after, allowing for a move to 30.51. 2 consecutive 2-hour closes below that 29.89 will target 27.14. So we're going to move into the 2-hour chart, which is what we're looking at. And as I was mentioning, is you can see here where this market continues to remain, on the weaker side. Although we saw, as I mentioned, a fine recovery. We had 28.89 as our level of support about the middle of the week on out, and we thought that we might hit it, and we were kind of hanging around, and then here, lo and behold, here comes the Bank of England, and then we ended up taking that dip well below and then rebounding like crazy on the way back up, and then henceforth we've started sliding back lower. Well, like I said, if we could get this close, and getting back in here to the analysis, a 2-hour close above 29.75 should turn those exponential moving averages into a buy mode and suggesting a move to 30.51. Well, like I said, 29.75 might be a bit of a stretch from this point. It's not that much higher, but if we can get a little bit of a good news, but certainly the dollar continuing to strengthen is certainly weighing on that. But if we could get a 2-hour close above that, that should get these EMAs moved higher and open the door potential for a move right here up to 30.51. Market has come off quite a bit. If you think about this, look at this high up in here, 32.18, and look how much we've come back down here. So a pretty good fall, except if we can get a close above this 29.75, a 2-hour close, that would really open the door for us up in here. So the resistance for right now is going to be just that 29.75. And we're looking here on the 2-hour chart. If we were to get 2 consecutive closes below this, 2 consecutive 2-hour closes, I guess you can consider it a 4-hour, but it would be 2 consecutive 2-hour closes to hold below here, then we're going down here to 27.14. That would be the area they'd be targeting. Now, whether that would happen or not, that would be the area that they would want to target, would be 27.14. Support right now, it's going to be that 28.89. Let's go move into the Aussie dollar. The Aussie dollar closed below the last retrace close. Exponential moving average have shifted to a sell mode. Market may pause on the possibility of good news from the U.S.-China trade talks coming this week, but most are expecting, as we were stating, probably planning to trying to go with an extension eventually. A resulting rally on announcement will find sellers at 72 cents. Initial support comes in at 70.27 with a challenge to 69.88 open. So let's go and take a look at where we stand here with the Aussie dollar. Well, things have changed. The fortunes have changed a bit here with the Aussie, and you can see here, even on the daily at the exponential moving averages. And I only use that for the half hour, but you can see they're good on the daily. I mean, once you get that momentum, it usually stays for a while, and certainly things have changed. And even the Trump Xi Jinping meeting, that's going to be called off. So you're not looking for anything big to come around that. And they're getting to. We're also seeing, as I mentioned, Litzinger, some of the more hawkish representatives, and you certainly wouldn't expect anything to be resolved. And things have turned around now, and especially with the RBA now suggesting a softer stance, and that certainly has weighed on here. So things have changed. Not only that, as I mentioned, the close here was lower than the previous retrace close. You can see right here. It's really opened the door for this Aussie dollar now to move lower. Initial support we're looking at is here at 70.27 with the door open potentially down here to 69.85. Now you can make the case there'll be some support in here, and we probably made it right down here, which is the 70.66. But looking out overall, it's going to be 70.27 overall. Now that's still a ways away. In some ways, not that far away. Only 60 pips. We can take a look at it here on a 2-hour chart. We'll go here with the 70.43. Potential here for 70.27, but there is some support here. Not a whole lot, but there's some support at 70.43. So we've had a pretty good fall. So if we take another dip, you're short the Aussie, then you probably look for a little bit of short covering to come in at 70.43. So we'll mark this off. And we already have that listed here. Upside. Well, we were talking about if there was some way they got some good news, and Blake has talked about that, he'd be a seller. Well, that comes in right there at 72 cents. There's a 72 cents. I think, on an announcement of good news, you'll see a pretty big rally, but we think that sellers would come in and start building in at 72 cents. Maybe they go a little bit nutty. I'm not nutty, but let's say they make it up to 72.30. Next area here, actually, you can call it right there, 72.42. But for starters right now, what we're looking at right now, it's that big level. Remember the 71.42 area here? So that would be our resistance So we're still about a good 40 pips away here from that almost. And certainly that remains bearish. Interesting here, we're seeing a little bit of a spike here in the dollar Swissy. Look at that. Interesting. Quite the run up, and I'm trying to see if there's any news in regards to this. And I'm looking here. Let's go to a shorter time frame just to see. Let's say it just stops it. Let's go and move this a little bit slower time frame to a 5 minute. Well, it looks like it wasn't a bad tick because look, I'm looking on a 5 minute here, and boy, did we see a run up in here. Look at this, all the way to 101 almost before we started coming right back down again. Right there was some good resistance right there, which actually par 98. They made it appear to par, look like it's par 92. Resistance would actually come in right there for right now at par 53. Actually, volume would be right there. You see right in the middle of all this, right, it would be the volume. That would come in at par 59. We'll call it par 60. Par 60 for right now. Although we've been higher this morning. Let's go with par 60. We had par 45 on Friday. That's where we were before, par 27, and we opened the door for par 45. So we're trying to make a trek back up in here. There's going to be some resistance right here again at par 27. Maybe the dollar Swiss is starting to light up again. So here's par 27. And Fridays we had marked off at par 45. And there's our par 60 for right now. Let's take a look at this on the 5 minute. Par 54 would be the 58%, 61% here. And you can see actually right there, look at that. It's par 59. So that comes in, and we had that coming across on the 2-hour chart. And par 55 is the 61%. So let's go with that par. We'll stay with that par 60 for resistance. And I'm not sure what tripped this. Support. We had 99.70. It certainly doesn't look like he's going to try and go for that. Support for starters is going to come in right. Well, that is 99.70, but certainly the dollar. Look at that on its highs right here, pushing higher. We came down here to 99.86. That is going to be support then. 99. Well, actually, it's 99.88. Be interesting to see if the Swisses start lighting up as far as action. Interesting also to see how we were to finish today at. You can see the significance here of 99.89. This will be interesting to see how this market plays out today. Now let's go and move into the dollar CAD. Keep an eye on this dollar Swissy then. Like I said, we're at par 20 for right now. Par 60 would be this. Par 54 would be the 61%. And par 60, we already saw that coming across on the 2-hour chart as a pretty good volume area right in here. Right there, par 60. And if you look on the 5-minute chart, par 59 is the last little reactionary point. So some good confluence there between par 54 and par 60 in the dollar Swiss. Moving on to the dollar CAD. The dollar CAD has successfully rebounded from the weekly support with 2 strong daily closes and only a pause after a strong jobs report. Upside potential move to 34.18. Solid resistance should appear at 33.54. Confluencing with 33.66 to 50% of the move of 30.67 to 36.64. Support comes in at 32.12. So let's go and move on to the Canadian dollar. And we're talking about this key weekly support that the market held from the prior week, and we found ourselves with 2 strong daily closes, and then we had a great Canadian jobs report. And you would have thought that would have taken this market, down here towards 32.12. Well, we held up pretty well in light of that. So the potential really we have is for this market to get up to 34.18 potential. But there is going to be some stiff resistance here at 33.54, which is confluence with 33.66. That's the 50% of this range. And support will come in here at 32.12. Well, when we saw this pullback here, we almost but didn't quite make it up here, down here to the 38% of this entire move back, coming back here. I'll show that to you. It almost made it, but not quite, and had some bids at the time here. If we were to go on and pair back, and we'll take a look here at the crude oil. Here at 52.29, still a bit on the weak side. So we may move up here almost to 133. Despite, look at the dollar index is still strengthening. Look at this, moving even higher here. today's going to be a very interesting day to follow the action of the dollar to see where, not only with the euro, the cable, now to extent the Swissy, if we were to go and pair back in this market, initial support is here at 32.58. But I think that there's still, if the dollar were to pair back, we'd be looking back towards 32.12. But let's take a look at this on a 30-minute. Yeah, there's a 32.57 right there. We've already come off quite a bit from this, almost at 133. We'll go with the 32.57. It's not that far away, and but the dollar's still holding up very, very well, exceptionally well. Resistance comes in right now at 32.92. And we'll move into crude oil. Okay, the 2-hour crude oil finds support at the volume level of 52.50, but remains in a sell mode. Resistance comes in at 53.39. A 2-hour close below 51.85 will target 49.58 with a pause at 49.94, which is 127% extension. So let's go on, a lot of numbers being thrown around there. Let's go and see what this all references to. Well, we've taken a dip here. Now, initially, we found ourselves with some support here, as I mentioned, this 52.50 here. And let's go back in here to the analysis. But it said a 2-hour close below 51.85 will target 49.85. Well, we did go on and take a dip. You see here, but we've successfully defended this 51.85. You can see this coming across right here. So here's where we closed here on the week at this key volume level. And we're talking about that as the market vacillated on both sides. Key volume level, we held here at this 52.50. Now we broke lower. But the key was, as I said, if we were to get a 2-hour close below 51.85, and remember, this is where I saw the market when we took that dip lower, and I had my support at 51.82. The market ended up holding there. We saw a little bit of a nice rebound, nothing huge, but a decent rebound. If we would have got a 2-hour close below 51.85, then we would definitely be targeting much lower here. And we were looking at 127% extension actually on here. If we got that 2-hour close, we'd be targeting 49.58 with a pause of 49.94. Now that'd be 127% extension of this most recent range here. Okay. Right there, you see? But we didn't get that close, so we haven't got it there. So hang on. But the market continues to remain under pressure. Well, part of that pressure obviously emanates because of concerns about global growth. In some ways, I'm even surprised that the crew's been able to hold up so well. as Europe continues to flounder with its growth, and really across the globe, if you think about it, for the most part. But we did go and defend this 51.85. So support right now is going to be that same 51.85. That's a key. If we lose that, then going to really run into some worries and trouble. So we got 51.79 here. We'll go back to which we did hold that area here. Actually, we came in and we held this 51.79 to the pip. Actually, it looks like, yeah, 51.77. But we'll stay with this 52.85. I mean 51.85. Well, here's that key volume level. So on a short-term basis, we'll go right there. Crude always likes to overshoot, so we'll go with 52.88 for resistance. And lo and behold, looky here, the Dalian pushing up higher. The Dalian remains stuck in the mud without traction to the upside or the downside. The pair closed just below key daily level 977. The upside challenge remains for 1038. Downside support is a bias pivot at 927. So we go back here to the Dalian. We've got 1034 on the daily. Where we're coming with this 1038 is actually on the 2-hour chart. Right there. See, coming right there. Essentially, it's 1039. Well, we're getting this pull here, or this, call it in the sense, push is coming from obviously the strength in the dollar. So there's a potential here for 1039, probably even a little bit higher, but you can see right there, 1039. Just, you could even edge a little bit higher, maybe to 1043. But there's our 1039 right there. Potentially, it could make it up as high as 1060, but 1039 is our area right there. You've got some nice resistance right there, 1060. And with this dollar strengthening, I mean, we've held so far here. This is just the next level, but we've held, we closed Friday just a couple of pips below that key 977, but we kept talking about how this market was just holding up so well. And just from a technical standpoint, if you hold up, it reminds me, it's reminiscent of gold. Remember, we kept talking about the 1304, 1304, 1304. And so when the market started to turn around, 1304 was just basically a spit away. And I was like, heck no, this market's not going to be happy with or satisfied with 1304. It's going to go for the 1323, which confluence with the 1322, the 78%. That's, I kind of feel the same here with the Dalian, because it's held in this area. It's not going to be satisfied with just the next level, which will be 1039. So we'll go with 1060. Support. Well, that's going to be that key daily level, which is going to be 977 right here. That'll be support. Actually, you make the case even a little bit higher, 1099, but we'll go with 1077 if we were to see some kind of a dollar pullback. Certainly doesn't look like it'd be the case, but we'll go with 977. Look at that Aussie yen go. No, I see. I mean, no, hang on a moment. There we go. Trying to push back higher. Um, there we go. If we get a little bit further pushback here, let's take a look where we stand here on a fib. Yeah, that's coming in just about right there, that same little area right here, where they could push to, which would be 78.34. We had 78.36. We'll keep the 36 there. And we'll go with support here right there, 77.76. And let's go on to the cash dollar index. After 7 consecutive daily closes higher, the index has its sights set on key resistance 96.72 looming. Market considers and may consider a pause to refresh if stops are taken out. Initial support is 96.23 with short-term resistance at 97.09. So let's take a look at, well, like I said, after 7 consecutive daily closes higher, and look at this, just been motoring higher and higher and higher. We're saying that 96.72 loomed, and this is key. This is very key right here. And we talked about potentially these stops taken out, and that let's see how we react. I think today is very important. This is the actual resistance area here that the market would focus on, which is this 97.09 here. Right there. 96 to 72 was a key area we talked about from the last run up here. Remember, we had 72 and 96.68 happened to be the 61%. But we've seen this market, we saw it sell off and come off quite a bit, but then turn around and successfully defend this area here. And boy, what a difference. I mean, this is just going on like gangbusters here. Now we're going to go for the 8th consecutive day in a row, and nobody wants to stand in the way of it. And even with the China trade talks, there isn't anything that looks like, if anything, the market continues to have the type of news like we talked about with the euro. The euro would come down and we'd be down, 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 down. And we get in there thinking, okay, well, we might see a bit of a respite, just a technical short-term rally. And, we'd say, okay, that seems plausible. And then all of a sudden we'd get German recessionary news, essentially. And if that was one thing, it's another. And these are big, and I'm saying significant in the sense of there's always issues going on with Italy. If it's not one thing, it's another. But when you get that poor economic data relentlessly coming out of Germany, then that's something that really has some teeth in it. So, we would just turn around and drop. Well, it's almost like the inverse here with the dollar index. By the time you come into an area where you're thinking, well, there might be a little bit of resistance, you have the news that's actually supporting this. Okay, it looks like we may be going back down towards the government shutdown talks. How the things going with China? Well, it doesn't look like they're going to resolve anything of any real significance. So those things that are supported for the dollar continue to keep on standing by, And not only that, but even reinforcing themselves. So as we come into Monday and we're saying, well, let's see how the dollar's doing. We're just about here at this key resistance. Well, it looks like over the weekend they got into a stalemate. It looks like things are going to work out with this right now with the government shutdown. We could go back to that area again. Well, then there's another boost for the dollar. Oh, by the way, also things may, at best, they may only see an olive branch extended for the U.S.-China talks. Certainly not anything of any real significant success. Here comes another push for the dollar. So, like I said, as an inverse relationship, in more ways than one, we're seeing news supportive for the dollar despite us coming into key levels. The next, here was the resistance above, but the next key resistance actually is this 97.09. This will probably come about at the same time if euro comes in and takes out 1285, and we'll have to see what happens. But there's our significant resistance here is 97.09. We're just above the 72 here. That's still almost 30 pips away here, or I should say 30 ticks away, but that's actually the significant resistance here that we'd be looking ahead. This is a key level, but this is where a target where they'd be pushing if we can push the dollar index even higher. So we're going to go with that 97.09. It's the same thing we're looking at the euro. We came down here in this 1209. We're kind of holding there, but we have to know where's the market looking at. Should we break lower here? And at least for stars, it'd be the 1286. Well, the same thing with the dollar index. Remember, we had this from last week. There's 9709. And we're gonna use 9623, which was our support. That's still going to remain the same. So now let's go on and move into the gold market. Gold is holding up like a champ. Look where the dollar is. You would think that gold would probably be well below 1300, but we'll get into the gold. Gold is paired back to the expected support area here of 1304, but remains well bid despite the dollar index. The shiny metal appears poised for one more upside pop if the dollar index pulls back for a respite. Upside resistance is 1341. Support is now 1293, followed by 1285. Well, right now, gold will certainly go. We finished up in here on Friday. We're thinking, well, if the dollar pulls back, we could see one more pop just to clean out the stops. Well, we're not seeing the dollar pull back. We're seeing the dollar continue to assault. Here at 96.80. We'll see how today plays out. I think today is actually an important day for the dollar index, and because we are above these key levels, can we continue to? And then on top of that, not only that, we've had such a sustained run up, 7 consecutive daily closes. Now we're moving for number 8. So where will the dollar come? Well, we have this 1304. My concern is if this dollar pushes higher, we're just going to have to goose these stops here. And so our initial support we're going to go with is 1293. And support, well, it's going to be 1315. That'll be, the resistance will be 1315. If things were to get turned around, that'd be the first level. Moving on to the bunds. They've been relentless. They really have. As the news continues to come out worse and worse out of the Eurozone, well, we came down here to 66.15. I think that was our support actually at the time. No, we had 65.86. So we've made these continued just pushes higher. Let's take a look where we stand here on a 30-minute. And now if you look at the exponential moving average, which I do use for the 30-minute, now we've now shifted into the sell mode as of today. Been in a buy mode since down here at 65.01. So it's been a pretty good run for almost 150 pips, actually, since they generated that buy mode. Obviously, a lot of things have happened in between here and there. But so now resistance would come in, go right, 66.36. Resistance would be right there, 66. We'll just move just a hair lower, 66.96. I mean, I apologize, 65.96. And let's go move into the DAX. Well, we finally saw this DAX weaken a bit, and we're actually into some key resistance right here, 11,020. The wolves continue out of Germany, and with the dollar strengthening, there actually just a little bit of resistance right there. I'm not sure how much further they can try and push, but there is some resistance right there. We'll go with the 11,044, but this is a key level right here, this 11,023. So we'll go with 11,044 if they want to try and push it a little bit higher. Support is going to come in right here at 10,942. The euro continues to remain under quite a bit of pressure here. Look at that. And it certainly looks like we want to challenge this 113 area here. Look at the dollar index. And another one that was kind of a bit of a surprise we saw, which was the dollar Swiss. We hit those stops, keeping on this par 59. But look at here, the dollar, the euro certainly seems destined to take out the 113, or certainly they would want to go and test those stops below that here. And we'll go and get the bias chart put out into the chat room. And thanks for joining us here on the European Crossover webinar.